Welcome to the Investment Value channel. My name is Victor, and in this video, I'm going to be covering Comcast. This is a diversified media company. You've likely have heard of NBC, NBC Sports, Peacock Streaming, Universal Studios, Universal, the studio company that produces movies. It's a long-time company, and they announced their earnings today. I was going to update my valuation of Comcast and share that with you. If you like content like this, subscribe to my channel. If you could do me a favor and like this video, I'd appreciate that very much. I have an MBA, a lot of business experience, and I like analyzing companies closely to determine if I want to invest in these companies. I like sharing that analysis on YouTube, and I'd like to tell you more about Comcast. I follow a process when I look at a company to invest in it. I have 4 key questions followed by a decision whether I want to buy more shares, hold, or sell my shares. The first question, do I want to be a part owner in the company? Do I want to be in the industry? Second, do I believe the management team is operating the company well? Is debt under control on the balance sheet and less than 3 times EBITDA? Am I getting a discount on the stock? I invest in stocks to make money, and the best way to do that is to get a discount when I acquire shares so I can see those share prices go up over time. Based on the answers to those questions, I buy, hold, or sell this particular stock. So Comcast has been around more than 100 years. They were first called Universal Pictures. They started in the movie business and have since diversified into other areas that make sense. For example, television, streaming. They also have a theme park related to a lot of their movies. So they're a little bit like Disney and a little bit different because they also have a broadband business where they provide broadband to a lot of households in the United States. One thing that investors really liked is that Peacock streaming is growing very quickly. And I think Comcast found a recipe for success, which is streaming live sports. Live sports has been one of their primary growth engines to get streaming off the ground. And it's been really working for them. Comcast announced their earnings today, and it was well received by Wall Street. Their stock price went up. Their revenue did go up, which is good to see. Their profit got even better, which is very good to see. And their free cash flow got much better, which is great to see because I use cash flow to value companies. Over the last 4 years, Comcast has gone up in revenue considerably. They've gone from 94 billion up to 121 billion, which makes it a 77% overall growth over 4 years. So it's good to see the company is growing and they're very profitable. Looking at their full P&L, it looks really good. Solid, a little bit of growth, good profit, and their number of shares has been going down over time, which is very good. Also, their debt is under control. It's less than 3 times EBITDA, which is very good to see. Cash flows have been flat, but very good this year. They've gone down 5%. But this is a high cash flow producing business, which is most of the businesses that I invest in produce cash flow. That's one of the key variables that I look for in investing in companies. And they produced a high amount of cash flow at $8.8 billion. It's down from $9.3 billion in the first half of 2022. The first half of 2023 was at $8.8 billion, representing about a 5% drop year to year. I'm going to value Comcast using the discounted free cash flow method and also using earnings per share and establishing a value based on earnings per share. I'm going to start with cash flows first. I'm going to use the run rate from 2022. I believe they're going to hit that this year. And that's going to be my starting point of cash flow, which was $15.7 billion. I'm going to grow those cash flows by just 4%, nice conservative number. And then after that, long-term growth is going to be 3%. In the future, all years included in the future, Comcast will produce an estimated $365 billion of free cash. All those cash flows together, discounted at today's value using a discount rate of 8%, which is their weighted average cost of capital. I get a value of all those free cash flows at $304 billion. I'm going to add the cash on the balance sheet and take away the debt, and I get to a equity value of $214 billion. The market cap of the company is 178 billion. So it offers up a 12% discount based on the free cash flow method. If I look at earnings per share, their earnings per share was really good. I'm going to give them 3.77 or $3.77. I'm going to have a PE of 20, which is a conservative PE. I could have gone 24, but I'm going to go 20. Growth rate of 3%. And based on the earnings per share method, the stock is discounted 44%. The combined amount is 23% discount on Comcast. Keep in mind they pay a dividend, and it does offer up a 23% discount. The stock price year to date is up 28%, which is very good. And in the last month, it's up 10%, which is excellent. Their dividend, they pay a 2.7% dividend. So it's good to see you got an appreciating stock value and you get some income in the form of that dividend. So let me return to the scorecard and scorecard Comcast. First, I do want to be part of the owner of the company. I like their industry. They produce a lot of free cash flow. The management team is doing a great job. Debt is less than 3 times EBITDA, and there's a discount available on the stock. Therefore, I'm going to be buying on dips. The discount isn't a big discount, so I have to be careful on my acquisition price. And as the market sells off, which I believe it will this second half of 2023, I'll be buying more Comcast shares. Thank you for watching my video. I really appreciate it. Do me a big favor and subscribe to my channel and like this video. It would really help my channel out, and I'd really appreciate that. Keep in mind, everything that I do is for entertainment and educational purposes. This is not investment advice. I'm not recommending you buy or sell Comcast stock. Again, thank you very much for watching, and good luck investing in 2023.